Most people think billionaires are rich because they work harder. That is completely wrong. Billionaires are rich because they think differently about money, time, and risk. In 2026, their investment mindset is changing again. Not because they want more money, but because the world itself is changing faster than ever. Technology, geopolitics, AI, inflation, interest rates, energy transition, and digital behavior are reshaping how wealth is created. Today, you will understand exactly how billionaires are thinking about investments in 2026, and more importantly, how you can apply the same thinking even if you are starting small. Let's begin with the first big shift. Shift 1. Billionaires are investing in systems, not just assets. In the past, people focused on buying things. A house. A stock. A business. In 2026, billionaires focus on systems. A system is something that produces money continuously without depending on one decision. For example, Jeff Bezos did not become wealthy by selling books. He built a logistics and data system that can sell anything. Elon Musk is not just selling cars. Tesla is a system of energy, software, data, and manufacturing. In 2026, billionaires are asking one question before investing. Does this asset grow stronger over time without my constant involvement? That is why they prefer platforms over products. Real-life example. A billionaire investing in real estate today is not just buying apartments. They are building rental management systems, short-term stay platforms, or co-living brands that can scale across cities. Lesson for you. Instead of asking, "What can I buy?" ask, "What system can I build or plug into?" Even a YouTube channel like WiseTalk is a system. Once built, it earns while you sleep. Shift 2. Speed of capital matters more than safety. Middle-class investors think like this. How do I protect my money? Billionaires think like this. How fast can my money move, learn, and grow? In 2026, money that stays idle loses value due to inflation and opportunity cost. That is why billionaires prefer liquid and flexible investments. Real-life example. Warren Buffett holds billions in cash not because he is afraid, but because cash gives speed. When opportunities crash into the market, he can move instantly. In 2020, during market crashes, Buffett bought companies at massive discounts because he had speed. In 2026, this mindset continues. Billionaires are investing in assets they can exit fast, rebalance fast, and redeploy fast. Examples include ETFs, private credit funds, short-term commercial real estate, AI startups, and digital businesses. Lesson for you. Avoid locking all your money into one long-term asset. Keep part of your money flexible so you can act when opportunities appear. Shift 3. Artificial intelligence is treated like electricity. In 2026, billionaires are not asking, "Should we invest in AI?" That question is already outdated. They are asking, which businesses will become useless without AI? Just like electricity transformed factories, AI is transforming every industry. Real-life example. Microsoft invested heavily in AI infrastructure, not just tools. They didn't wait for proof. They built the backbone. Another example. Amazon uses AI to optimize pricing, logistics, inventory, and recommendations. This gives them an unfair advantage over smaller competitors. Billionaires invest where AI becomes unavoidable. Healthcare diagnostics, finance automation, legal research, marketing, manufacturing, and education. Lesson for you. You don't need to create AI. But you must invest in businesses or skills that become stronger because of AI. Even using AI to automate content, ads, or sales gives you leverage. Shift 4. They buy when the crowd is confused. The public invests based on headlines. Billionaires invest based on cycles. In 2026, markets will still be volatile. Interest rates may change. Recessions may scare people. This is where billionaires become aggressive. Real-life example. During the 2008 financial crisis, people panicked and sold real estate. Billionaires quietly bought properties at 40 to 60% discounts. In 2020, when the world was locked down, smart investors bought tech stocks and digital platforms. In 2026, the same pattern exists. Billionaires are watching sectors where fear is high but fundamentals are strong. Examples include emerging markets, renewable energy infrastructure, undervalued tech, and distressed businesses. Lesson for you. When everyone is afraid, slow down and analyze. Fear often hides opportunity. Shift 5. Ownership beats salary every time. No billionaire depends on salary. Even billionaire CEOs earn most of their wealth through ownership, not income. In 2026, this thinking is stronger than ever. Real-life example. Mark Zuckerberg does not earn billions in salary. His wealth comes from owning Facebook shares. A startup founder who owns 20% of a growing company will outperform a high-paid employee over time. Billionaires invest in ownership, equity, royalties, intellectual property, brands. Lesson for you. Instead of only chasing higher income, chase ownership. Even owning a small online business, YouTube channel, affiliate website, or digital product gives compounding benefits. Shift 6. Global thinking, local execution. Billionaires do not limit themselves to one country. In 2026, money flows globally faster than ever. Real-life example. A US investor buys farmland in South America. A European fund invests in Indian startups. A Middle Eastern investor funds renewable projects in Africa. They diversify geographically to reduce risk and increase opportunity. Lesson for you. Even with small capital, you can think globally. You can invest in global ETFs, international businesses, digital products, or serve foreign clients online. Your location does not limit your income anymore. Shift 7. They invest in skills before assets. Before investing millions, billionaires invest in understanding. They read, hire advisors, test small, and then scale. Real-life example. Ray Dalio spends massive resources studying economic cycles before placing bets. Elon Musk learned rocket science before building SpaceX. In 2026, learning speed matters more than credentials. Lesson for you. Before investing money, invest time in understanding. Financial literacy, market psychology, digital skills, and business fundamentals multiply every rupee or dollar you invest. Final thought. Billionaire thinking is not about money. Billionaires do not wake up thinking about money. They think about leverage, systems, time, ownership, speed. In 2026, the biggest risk is not losing money. The biggest risk is thinking small while the world moves fast. You do not need to be a billionaire to think like one. Start where you are. Build systems. Own assets. Learn continuously. Stay flexible. Money grows fastest when your mindset grows first. This is not financial advice. This is billionaire thinking. And thinking differently is always free.